Okay, why don't we get started? It's my pleasure today to introduce Clip Money to the Wellington Altus team. Believe it or not, in the US, approximately 90% of all business deposits use the branch network, and 35% of all in-person transactions are still made in cash. So Clip Money offers businesses and banks a cost-effective and convenient solution for business banking deposits with their mobile app, their network, and internet-connected Clip drop boxes. Clip Money solved an interesting problem as bank branches have high capital costs, high labor costs, and limited locations. And I think we're all aware this is even more pronounced as the rate of bank branch closes is accelerating as more and more consumers shift to digital banking. So Clip Money does reduce costs by about 30 to 60% versus traditional branches, 40 to 60% versus armored cars. And I know I'm not doing the story justice, but today with us is Joseph Haraj, co-founder and CEO, and Andrew Tussing, CFO of Clip Money, to walk us through the story. So gentlemen, thank you so much for your time.
Thanks for having us, and nice to meet everybody here on the call, and thanks for the opportunity. So great intro. Thank you for that. So what Clip has built is a financial operating system that enables businesses and banks to interact with each other in a much more effective way. Banks have done a really good job over the last 5 to 10 years in investing in technology that reduces the reliance for consumers on with the bank branch. So consumers, people like us, don't really need to go into the bank branch very often anymore. But that is not the case for businesses. So what it means for banks is businesses are still coming into the bank branch, making it harder for them to close to the degree that they would like to be able to shut down branches over time. So the size of the first transaction that we're tackling on our platform is cash deposits. And as it's the largest and most troublesome transaction for both businesses and banks. So now, as Kenrick said earlier, 90% of businesses use the branch network multiple times a week to conduct these transactions. Only 10% of businesses actually use armored services. And in terms of the size of the cash market, it's still a very, very large market, whereby 35% of all in-person transactions are still being made, or 35% of all in-person transactions are still made in cash in the United States, which is our largest market. And to put that into context, that's bigger than debit or credit on its own in the US. We've got a few trends that are really acting as tailwinds for Clip and for our business model. The first is cash is actually increasing in circulation in both Canada and the US. So over the last 10 years, it's increased about, faster than GDP or greater than GDP. So it's actual true increases. There's more bills floating around in the Canadian and the US economy. But what's happened at the retail level is that there's many more ways to pay. The pie has gotten bigger, but there are so many more participants in it. Everyone's taking a little bit of a smaller share. And that's what's happening with cash as well. And what that pressure is, that is providing so much pressure on the cost structure today for the existing infrastructure, i.e. the bank branch, to be able to manage these transactions. The second tailwind is that branches are closing at an accelerated rate and will continue to do so. Many branches today that are in service today that aren't going to be closed are going to be converted to be cashless. So making that this trend, is really acting as a nice tailwind for us. And we'll talk about the value proposition to all the different constituents, the banks and users, here in a few slides. So when we look at the payments ecosystem, payments is made up roughly a third debit, a third credit, a third cash, give or take a few percentage points, but market by market, country by country. But what Clip is doing is we're looking to fill in the white space on the right-hand side of the slide. So today, bank branches are the only processor of these transactions, of these cash deposits today. And there's no network, there's no payments network that links all of these transactions or that processes all of these transactions. So today, if you bank with, TD Bank, for example, and you're a business walking your cash over, you provide the teller the deposit, they count it and they put it in your bank account. That transaction doesn't hit any payment network. So what we did is we built the payment network to facilitate all of these transactions really starting to unlock a lot of value and cost savings in our overall business model. And we'll talk about how we've done that in a moment. So the platform itself has three main components. The first is an app that we've built. We use the app to register users and to conduct our transactions. Then we've got our network of our clip drops, which are these internet connected safes that we're installing in everyday retail locations, highly convenient locations that are close to where, to businesses. We're installing these in malls, in big box stores, in everyday retail locations that are conveniently located around a lot of different businesses. And then we built our platform, our end-to-end kind of, we'll call it our back-end engine here, to conduct all of these transactions, from payments to compliance to reporting and so on. And underneath all of that, in the US, we've partnered with a sponsor bank to enable us to perform these transactions. And we actually have the same plumbing that a neobank or a digital bank would have to be able to support these transactions. We are not a bank. We're not getting into the banking business. We are service provider to banks, both legacy banks, the Bank of Americas, the Chases of the world, and to the digital banks that are emerging that need access. So we've made progress really across three main areas that we're quite happy with. The first is partnerships for retail locations. So we talked about us installing in malls. We've got a tremendous amount of traction in the mall segment. Our largest customer in the mall segment is Simons Mall Properties. They're the largest mall owner operator in the United States. But we've got partnerships with many different mall owner operators. We're installing across Oxford Malls, RioCan, Cadillac Fairview, Simons, obviously, Brookfield, Tanger, etc. So there's really great traction there. And what's interesting about Simons and what's important about Simons is that not only are they the largest, but they're actually engaged in partnering with us to educate their tenants about the value of the service. So they're actually engaged in marketing campaigns and so on and so forth to inform their tenant base. The second retail partnership that we have is with Staples. Staples is a really important one for us for a variety of reasons. One is they have a lot of alignment with businesses. They service businesses. And as a result of that, they locate their stores in areas that have a lot of businesses around them. So their locations themselves are tremendously convenient locations for our service. So we're installing our boxes in their stores, but they are also a channel partner. And they're marketing our service to their existing customers, their loyalty members. We will have a landing spot on their website. You'll be able to sign up for Clip services on the website. So they're marketing us digitally, and they're also marketing us in store. It's a wonderful partnership. The first market that we're deploying is with them is in Massachusetts. And we are now also planning our New York City rollout with them. So it'll be market by market. We'll grow with them as we go. The second area that we've got quite a bit of traction in is with banks. So today these transactions occur at bank branches. Banks don't want these transactions to occur there. They'd like to get them out of the branch. And because our system is this is the first system of its type, or that enables businesses to do deposits outside of bank branches, we're getting a lot of traction with the banking community. And we'll talk about the value proposition to the banks and why they like our offering. So we partnered with CIBC in Canada. We are deploying across the Greater Toronto area, and they're effectively signing their customers up and to use our boxes and going to the bank branch. So it's a super exciting kind of opportunity for us. We've got numerous other banks, and we anticipate to be announcing several other banks throughout the course of the year. We're at contract right now with, for example, with one of the largest banks in the United States to deploy across the Massachusetts market. We have also established a couple operational partnerships that are also very important. So the first one is with Brinks. Brinks is putting up all the capital for our hardware boxes. So we're not, investing our capital in the hardware. Brinks is. In addition to putting up the capital for the hardware, they are also our provisional credit provider, which means that they own the cash once it goes into the box. And that enables us, because they fund us daily, we're able to, for the amount of money that goes into the box, we're able to fund our customers on a daily basis, which does two really important things for us. The first is that it enables us to service the boxes on a much more kind of dynamic service schedule versus having to go every day to service the box. So it helps us reduce our operating cost. And the second area where that really helps us is that it helps our customer, because they're getting their funding for their deposits on a daily basis. The second kind of operational area I'd like to talk about is that we've partnered with a company by the name of Glory. Glory is a publicly traded company in Japan. They are roughly a $1.5 billion market cap company, and they are the global leader in cash automation technology for bank branches today. So in almost any branch that you go to, and you look behind the teller line, you will see equipment there that manages the cash. And in other words, there's safes that are, that count the currency in and out and so on and so forth, that almost all major banks leverage. And these folks have the lion's share of this market. They've got a dramatic market share leading position. And they're the lead investor in this financing, which, by the way, is a $10 million financing, and roughly 50% of it is committed prior to even entering into the marketing activities that we're starting off this week. In addition to the investment, they are also a commercial partner with us, whereby they're reselling our network to their bank customers. It's a compelling deal for us as well, because it enables us to activate a sales force across all of the major banks and relationships with all of the major banks across the US. Not going to bore you with our management team. There's a lot of words on this slide that you guys can take a look at if you're interested. We've got a tremendous amount of experience on this management team coming from the ATM space, which is a very similar type of business, although highly commoditized, but it's similar in the sense that they're self-service and that they're network devices and so on and so forth. We've got, this management team has experience building, scaling, and even selling companies. So we believe that we've got the best management team in the industry for what we're about to enter into here. So this slide really, illustrates the operational model that we've assembled here. So today, on the left-hand side of the slide, you've got bank branches, you've got a handful of businesses that are connected to those branches. So again, if you bank with a TD Bank, you have to go to a TD Bank branch to deposit. You can't go to a Royal Bank branch to do your deposit. So what this is it's a high capital, really high labor, extremely high cost mechanism or method to process these transactions. To put it into context, our processing rates to banks is about 40% less expensive than they can do it themselves. Then on top of that, as we deploy our scale, and we will have a lot more scale than individual banks do on their own in terms of access points, we will be deploying 16,000 units across Canada and the United States. And how that compares to the largest banks, which are, Bank of America, Chase, and Wells Fargo, they have anywhere between 4,000 and 5,500 branches. So we will be far more convenient. We will be in many more locations than an individual bank will on its own. And what that enables the bank to do over time is it enables them to help close more branches over time. If we can help a bank in a very conservative way close an additional 100 branches, that's an additional $100 million plus savings annually to that bank. So the value proposition is very strong to banks. Again, our model is we have a low cost device, and we have many businesses banking with many banks using the same location. So it is a far more efficient model than what is in the market today. We talked about the bank value proposition that's strong. The user value proposition is equally as strong. We save our users anywhere from 30 to 60%, versus going to a bank to drop off their deposits, as the majority of deposits are conducted by people that are employees, that are hourly paid employees, that are going to these bank branches to do these deposits. It's actually quite expensive for the business. And I mean, it's easy to see how much more cost effective we are versus an armored car service. We talked a lot about cash. We're deploying, our cash deposit solution right now. There's two other bolt-on products that we're going to be offering to the market here in short order. One is mobile check deposits. Again, today, because the majority of these transactions are conducted by employees, they don't have access to the online banking or the mobile app to be able to take a picture of the check. So what they're doing is they're taking that check to the bank branch to be deposited either through the night deposit box or through the teller. Again, very expensive transaction for the bank. So what we're doing is we're building a bank agnostic check deposit system that enables the employees of the business to take a picture of that check and have it deposited to their account, to the business's account. We're also doing change orders. If you accept cash, you need to eventually get coin and change to be able to make that. Our solution is a centrally fulfilled solution that's delivered by either courier or through postal service. Then there's additional transactions because we have the banking infrastructure underneath us that we can start to offer payments, disbursements, lending, even crypto services are transactions that are very attractive to us. Our endpoints, we talked about Clip Drops, which is our bag deposit system, but we're deploying across ATMs as well. Because today, if you can only accept deposits on an ATM machine for the from the bank that owns that device. Tomorrow, once we're integrated, you can accept deposits from any business across any business banking with any bank. So it becomes a shared network as well. So here's a few screenshots of our system, again, of our app, really user-friendly, easy to use. I'd like to take a moment to talk about a little bit more about how customers register for Clip. So you can register directly, as we mentioned. If you register directly, the Clip charges the customer fees directly for the usage of our platform. And then the second way they can do it again is through their bank. And when their bank if they register through their bank, because their bank has subscribed to our network, there's an in-app branded experience that could be provided as well in our app. The way we make revenue is two ways. We have two methods of generating revenue. The first is transaction fees. So we charge transaction fees for the use of our system, and we charge by the transaction. So there's no long-term commitments like there would be for armored carrier service. It's basically a transactional model. You use it, you pay. You don't use it, you don't pay. We have two types of businesses. One is, two types of, subset of kind of users. We have enterprise users. Enterprise users are, retailers or, businesses that have many different service locations, many different stores. Those types of businesses typically deposit 7 times a week. They may not go to the bank 7 times to do this transaction, but they do 7 individual deposits a week, and they typically accept more cash. Therefore, the lifetime value for this customer is higher than an independent customer, an independent business that may go 2 to 3 times a week to the bank branch. We sell also subscriptions, which are fixed monthly fees by device to banks. So we have 2 types of subscriptions. One is our lead subscription. We only sell 1 lead subscription to each particular Clip Drop. And what that enables, that provides the bank fee-free access for their customer. It's not fee-free to Clip. Instead of us charging the customer directly the fees, we charge the bank the fees, and they get some branding rights on the solution itself. It's digital. The branding is digital, so we have an LCD topper on all of our devices, so they'll get branding on the LCD topper, and they'll get an in-app branded experience as well. Then we have secondary subscriptions. These are lower cost. They provide the same benefits that the lead subscription has, minus the branding attributes. We can sell multiple subscriptions by box, so this is a very scalable revenue source for us. A picture's worth 1,000 words. We, in a very short period of time, have gone out and secured some amazing real estate, quite frankly, in a very short period of time. So we're going to be deploying 1,700 units across, Canada and the US over the next 12 to 18 months. 1,200 of them, so roughly 70% of them, are fully contracted for. They're just waiting for our units. To put this into context, this network will already be a larger network than a bank like CIBC's, a major financial institution. So you could see how this really scales, is going to scale quickly across the market. In terms of our reception from retailers, it's been quite strong in that, because it's first to market, we're not displacing anybody, right? We're not displacing a solution like an ATM or some other self-service kiosk, that they're already generating money. This is really a new opportunity for our retail partners to generate new revenue and highly repetitive foot traffic, which they like, because that can convert into over-the-counter sales as our business users go into their store regularly. In terms of the opportunity, so excluding the following, excluding ATM deposits, change orders, and check deposits, and also excluding international expansion, any international expansion beyond Canada and the US. This is and deploying 16,000 units with conservative transaction assumptions based on our market knowledge from the ATM segment. This is a $350 to $400 million revenue opportunity just in these two markets, and driving an EBITDA margin of 30 to 35%. The international nature of our solution is actually quite a compelling and interesting one for us. This is the problem that we are solving is not just a Canadian problem or a US problem. This is a problem in every Western, market that is, digitally enabled. And both Glory and Brinks are international organizations. And so, as you could imagine, there's a lot of excitement and anticipation of, how do we start to take this business model and make it portable, because it is highly portable, and take it to new markets where we could really start to expand our reach. I'll turn the slide to Andrew, where he can talk us through the capital raised here.
Yeah, thanks, Joe. So we're raising 10 million, as Joe mentioned, to list on the TSXV. We have our application in. We submitted it just around the Christmas time, and look to have that finalized by the end of this month. So the dollars that get invested are going to sit in escrow for a very short period of time, which is good. Valuation is 55 million Canadian pre-money. Of the 10 million so far, 3 Glory has taken, the strategic investor, the Japanese company, and we have about 1.5, 2 million of funds already pulled in for our friends and family and presidents list. So there's roughly 5 million Canadian left. Each share will be $1 out the chute, and then we'll have a half warrant exercisable at $1.50. That's exercisable for 24 months. In terms of the cap table, post RTO, the board and management will still have 58%. We have close to 70% right now. The board will have 58%. So very big shareholders from the founders. And then you can see at the bottom, there's some pretty stringent escrow schedules for founders, for the pre-RTO investors, and for the shell, stretching out over 3 years. The RTO dollars that come in, the 10 million, do not have any escrow restrictions on them. Let's see, what else is important on this? I think those are the key facts we'll want to go through on the capital raise. Joe, anything you want to add there?
No, I think you covered it all, with the exception that we anticipate to be fully trading end of March, very early April. So it makes the escrow period, it's a quick close effectively.